Good afternoon, everyone. Welcome to our 2017 year-end close workshop for Dynamics GP. We are excited to have you all join us today. Just to give you an idea of who's on the line, you've got myself, Chelsea Schlepp, one of the client strategy managers here at Dynartis, as well as Erin Daniels, the other client strategy manager. So really quickly before we get started, I just wanted to mention registration is now open for our Vision 2018 user conference. That's coming up in April at the Ritz-Carlton in Charlotte. Seems far away, but it will be here before you know it. So as I mentioned, it's registration is now open. We have an early bird special through the end of the year. It's just $99 to register, and you can get to that on our website if you haven't gotten the emails at interdynartis.com/vision. So a really quick poll on that. How many people, I'm sure some of you have been before, but how many people are planning to attend Vision 2018? I've got a poll up real quick, so we'll give you just a minute to answer. All right, and then just a couple more seconds, we'll go ahead and close it. All right, so we have right now about 35% of you that say yes, 17 no, and 48% who aren't sure yet. So quite a bit of you undecided, and I know it's not until next year, so it's a lot to think about, but we are really excited and look forward to having you if you can join us. Let's see, Shawn, I don't see your screen anymore. Oh, there it is. Okay. All right, so moving right along, I want to go ahead and introduce our presenter, Shawn Dorward, who is one of our fabulous implementation consultants. He is a GPUG All-Star, which all of you may know from working with him if you have, but one of his most recent accomplishments that he's very proud of, we're all very proud of, is he was selected to be a Microsoft MVP for GP, and there are not very many of them in the world, and he can tell you the exact number because I can't remember, but he is definitely an elite group, so we're excited to have him, and I'm sure you will enjoy the presentation. Shawn?
Excellent. Well, good afternoon, everyone. Thank you, Chelsea. Thank you, Erin. I appreciate everyone taking the time today to get with us and get a little refresher on the year-end closing process. So for those of you who've done it before, that's what this will be. It's just a refresher, maybe some little life hacks in the mix here to give you some good head starts on getting things taken care of. Before we jump into it, I just want to make sure that everyone's aware of some great new things that we're doing. We're offering free quarterly workshops. Those are available in South Carolina and North Carolina. I put a link here to our webinar and workshops part of our website. So as those get updated, feel free to check that out and register. It is completely free for our customers. We do a half-day workshop all about GP. It's pretty fun stuff. And also out there are training sessions that are available. It's right up there in that events drop-down. All of our training and our workshop training sessions are CPE eligible. So just wanted to make sure that everyone is aware of that. Great, and so we'll go ahead and get started. Our agenda, we're going to cover the closing of the modules in GP. Every module has a closing process, and we're going to dissect that and go through some best practices. So let's get started. I have a little cheat sheet here showing a breakout of module and also what type of closing is offered, whether it's a calendar closing or a fiscal closing. You see the sales and purchasing module both have calendar and fiscal available. That's predominantly for the year-to-date summary fields, and we'll get into that. So a little interesting thing is why payroll first? Well, certainly payroll is first because we have to get through, well, payroll should always be first. Let's make that clear. We have to get through the actual year-end process for payroll. It's really the only area that can't carry over into the fiscal year. into the new fiscal year or calendar year. And then naturally, financials last for very obvious reasons in the accounting world. We definitely want to make sure that everything else in all the other modules is accounted for before we do our formal closing of our financial. So this is sort of the order that we're going to go through today. And so we'll get started closing the payroll module. So you definitely want to close the payroll module if you are a payroll shop. If you use in-house GP payroll, you want to pay attention to this, and it certainly likely is on your radar already. When should this be run? The actual closing process should be run after the last payroll of the year and before the first payroll of the new year. Naturally, there's all sorts of things that you probably need to tend to, updating benefit codes and deduction codes and things of that nature, but we're just going to cover the closing process in total here. Do I need to install the year-end update? So every year, Microsoft works hard to capture all of the law changes, whether that's a programmatic change or tax rate change, and capture that and have that implemented into Microsoft Dynamics GP. So if you're not familiar with this, the answer is yes. You definitely need to install the year-end update. And I want to make sure that everyone's aware that the year-end software update is not anchored to the timing that I just mentioned for when you run your close. A lot of folks kind of consider the year-end update and the year-end close process to be one and the same. They don't necessarily need to be that way. You can run your year-end updates today if you want to. And a lot of you, if you're using payroll, you've probably already heard from some of our great consultants, Jessica or Katie or whomever, to get this done. So there are other reasons why you would want to do it sooner. Certainly you have enough stress at the end of the year, so go ahead and get that taken care of. The key here is that you're only applying the software update. You're not applying the new year tax table changes. So you still have that second part. And I just wanted to break them up here. So a lot of folks take this whole year end and they consider it one thing, but really it's broken up into two. You have the software, like I said, which you can run at any time, and it's been available for a couple weeks already. And then the tax update, that's to update the tax rates for the new year. And be on the lookout because there likely will be tax rate changes at the end of the first quarter or early in the second quarter of 2018. And with that being said, if you're a GP 2013 user, mainstream support is expiring April 2018. And what that simply means is if you haven't already heard from us or been reminded about this and you're using payroll and GP, we have to have a plan for you to upgrade so that you get continued support for those year-end updates for payroll. So with that, speaking of versions, let's take another quick poll, Chelsea.
Sure, so we just wanted to see what version of GP you are on. We've got 2016, 2015, 2013, or an earlier version. You can go ahead and enter that. 2018 was just released less than 2 weeks ago. I don't think we have anyone on that yet.
We do. We actually just wrapped up an upgrade this morning, which is really exciting. But they may probably not hear on the call today.
Okay. Great. So yeah, if you can get that entered. It also just helps us for the webinar that Shawn knows, specifically to make sure we're pointing out the features for each version. So I'm going to go ahead. We've got most people voted at this point. So I'm going to go ahead and close this, show you guys what we've got. We've got the majority of the people on today are on 2016. We've got a few on 2015 and a handful of you still on 2013. Again, as Shawn mentioned, if you don't have a plan for upgrading on 2013, reach out, let us know kind of what your interest would be there, just because we want to make sure we get you on the calendar before support ends. All right, Shawn?
Okay, great. So let's continue through payroll. So what I've done is I've taken the steps. Microsoft offers some steps for sure. I've taken the steps and kind of broken them up here. I'm not going to re-say everything that's on the screen, but this will be your little cheat sheet. Definitely want to take pre and post backups throughout this process. Those are SQL database backups I'm referring to. When it comes to year end, you certainly want to make sure you have all of your transactions posted. So we're talking about the payroll module, but that's very true for every module when it comes to closing. So backups and posting your transactions you're going to see that's very repetitive in my checklist throughout each module because it's just as true no matter where you are. And here we have some verifying and auditing of our W-2 information. I'm going to show you some cool things around that. So let's go and take a look. Okay, actually, before we do, I want to point out a few things. If you have to report ACA, here's a GP payroll life hack for you. Integrity Data offers an add-in, an additional add-in for GP. It's just a simple chunk file that gets installed. It is free, and I'll show you that here. It basically, instead of doing all that work throughout the year, you could just come in the GP into the employee maintenance card. After you have it installed, it is free. And let me come into the employee maintenance card here. Pull up my employee now. So, oh, I'm in the wrong version here. Oh, sorry about that. I don't have it installed. I thought I did. But you'll in this additional, you have a drop down, and then you just hard key the changes for your ACA that the end result needs to be, and then just like that, you can get that on your 1095-Cs rather than having to go through that whole, you know, change your system date, make the change, those kind of things. So you can't download it anywhere. You have to reach out to Tom Franz at Integrity Data. There's his email. Tell him I sent you, and you can go ahead and try that out, see if that works for you. Another thing that I wanted to point out, and I'm just going to show you the close process here in a moment. It's very simple, but we don't have to wait until year end to run our year-end wage file. You can run it as many times as you want for the year, anytime you want, as long as you are sure to run it one more time after your last payroll so that it replaces and updates your final. Any changes you make to the edit W-2 in that process are going to get overwritten when you rerun it. So the idea behind this is run your year-end wage file early and often, audit and spot check your data, but just keep track of changes that you need to make or do them in the system through the adjustments area so that when you rerun it, those things are captured. That'll save you a lot of stress at year end. Another thing I want to mention is I've got two SQL views here. One is for year-to-date hours, and you get this slide deck. Here's the SQL view. This gets saved onto your, or ran onto your SQL server against your company database, and then you can bring that into your smart list and get rid of this so that you can actually see that data really easily and move it to Excel if you need to. I've already done that. I've dropped it on my SQL server. It's a rather quick process, and then put it in here under my payroll area. So here's my year-to-date hours, and just like that, I have my by year, by employee, and the hours. So if I'm looking at Miss Ackerman here and it says 3,046 hours, well, I know something's wrong in my system, and I can just use my SmartList functionality to filter this down and just get it by the particular year that I'm looking for. I'm in a demo environment, so my years are in the future. Next one I wanted to show you is another SQL view. This one is awesome. I absolutely love this one. So if you run your year-end wage file, if you're familiar with this process, let me come into payroll, and we're going to actually do this. This is a routine. So we're going to come into routines and then year-end closing. Now I've already run mine, and like I said, we can rerun it over and over again. And all it's going to do is say, hey, you've already ran this for the year. Do you want to delete it and start over? The key here is delete. It's not going to add anything. Yeah, so I'm going to delete it and then rerun my year-end wage file. So it's really that simple. Now I get my year-end wage report. So we can audit this report. I'm just going to bring this to the screen. If you have a lot of employees, this can be tedious, but it does take up a lot of paper, right? So it gives a lot of information, valuable information, but takes up a lot of paper. But what we can do instead is use this smart list, and I'm giving this to you. No worries. This is real easy to get onto your smart list. So instead of having to audit that data, here it is, the same information in a smart list for me, and I can move this to Excel and edit or audit this rather than having to look at that black and white paper. Now, what I want to show you is, remember I said it's delete. So if I come and try to close this again, and I stop at the delete, so I'm going to process my carryover, and I'm just going to delete my existing records, but then I'm not going to reclose my year. So if I refresh this now, it's going to show nothing. And the reason I wanted to show you that is this is not a live look at your payroll processing data. This is specifically for your year-end wage report, which actually feeds to your W-2s. So then just, again, close my year, roll over my PTO if I do that. And now if I refresh my SMARTLIST because I've closed my year, I have that data for me to audit. Pretty cool stuff. Also, depending on your version, not sure if you're familiar with the preprint, or the W-2s now have the graphic enhancements, so the boxes print with them now. And so we run our year-end wage file. The next thing we want to do, if we have to make changes, we come and do that in the edit W-2. But remember, every time we run the year-end wage process for that year, it overwrites this information. So edit the W-2, the next thing is print the W-2. And if I wanted to use the pre-printed forms, I would come down and I would choose W-2 forms in my print options box and then change to one wide forms with box. So now when I print my W-2s, I can go ahead and print them out, and I don't have to buy those and print and align it. Now what I have seen is sometimes we got to tweak this a little bit to get them to fit in the window, but outside of that, that's a big time saver and can save you some money as well. So pretty slick. Let's see what else. Wanted to make sure you saw that. And lastly here for payroll, this is a good deep checklist, step-by-step incorporating the backups in the year-end update. As I mentioned, that's you could do that earlier on, but there's the year-end update checklist for payroll. So that brings us to the end of our payroll section. So next we're going to move into the inventory module. Certainly want to run the inventory closing process if you use the inventory module. Basically, this is going to do a couple things. It updates the yearly quantity summaries and zeroes out beginning year amounts. So if you do use any of your inventory analytic fields for year-to-year information, you want to be sure to do this. Inventory is a fiscal year closing, and you want to be sure to do this before new fiscal year transactions are posted. That can be challenging, not just for this module, for payables and sales as well, and we'll talk more about that in a little bit. So some folks really just draw the line and say, okay, I'm going to close inventory. It'll get reset with my actual December closing instead of treating it as a 12/31. We have some options when we run our closing for inventory. We can remove discontinued items, sold lot attributes. We can also remove sold receipts and cost change history. And lastly, depending on your valuation type, you can update the item standard cost. So again, just like earlier on, here's our step-by-step list, including our posting of all the transactions, our pre and post backup. We sometimes have the need to run the reconcile for sales order processing and purchase order processing, and then ultimately inventory. This helps get all of those transactions tied up and actually calculated correctly in your inventory stock status values. You may want to try this in a test environment depending on how much quantity you have in your environment. Also, you want to try to do a physical stock count if you're going to be running, especially if you're going to be running the update standard costs. Make sure all your inventory adjustments are posted. And then a couple reports here that I find valuable when running year end. You may want to run these and save them off as a text file. So let's go ahead and take a look at the inventory closing process. Here it is, it's in routines, inventory, routines, year-end close. And we've got a few options here. I have it larger on my slide, so we'll look at that. Discontinued items, we can remove those. That's pretty self-explanatory. But let's go ahead and get a little bit more detail about that because there are some restrictions. If you select this, it'll remove discontinued items flagged as discontinued unless there are items are assigned to a kit, they're a component of a bill, or the item has one or more bills and materials of its own. So there are some exceptions to that. If you elect to remove sold lot attributes, this is where you're moving the things like expiration dates, serial numbers, or excuse me, lot number, tracked by lot numbers, and remove it from sold items. So that'll just keep a little bit less data on your SQL Server. And lastly here, sold receipts. If you're using LIFO periodic or FIFO periodic. You can remove those transactions that were sold and received, and as well as the cost change data that's tracked in the system. What's nice about this is you can do it as of a certain day. So maybe perhaps at the end of 2017, I want to remove them all as of the end of 2014. So I still have a good chunk of history. And then lastly, you can choose to update the item standard cost if you're using FIFO or LIFO. It'll automatically adjust to the current cost. So pretty simple process. I went and dug into the system and put together a list, pulled together a list of what gets affected when you close the inventory module. So if you weren't quite sure exactly what happens, I put this together for you, and we'll have that for you when we send the slide deck out as well. And because inventory is fiscal year, here's our checklist. Remember, if you're going to reconcile, I recommend doing that in tests first if you have large quantities. It just can take quite a while. And if there are a lot of disconnected records and a lot of updates that come from that reconcile, you could basically affect your standard cost. Very good. So Chelsea, we have one more poll here, a little fun one. What's your favorite part of the holidays?
Yep, sorry, let me get that launched here. So, favorite part of the holidays. Have some suggestions: getting some time off work, seeing friends and family, cooking and baking, and of course eating, the cold weather, or something different.
I don't see the poll, but mine definitely would not be the cold weather. That would not be my choice.
Well, I'll give you a little spoiler alert. So far, that answer is at 0%. So I think everybody's with you. All right, guys. So I'm going to go ahead and close the poll, and you can see the results here. And as predicted, 0% for the cold weather. But we got a tie, I think, between seeing family and friends, or pretty close to a tie between seeing family and friends and getting some time off work. A little bit of rest for everybody before year-end close.
Excellent. So what we're going to do now is move into the sales module. Thank you all for participating in those polls. Just try to have a little bit of fun here as well. We're going to move into the sales and payables module, and I want to just kind of take a second and talk about what happens here specifically in terms of year to date. And this has been something that folks trip over for years. So if I come into purchasing, for example, and go to, let's see, inquiry and payable summary, for example. So if no, wrong window. No, I feel like that's the right window. Let me just grab a vendor. While I'm doing this, so basically the system has year-to-date values in different areas. No, this is not the right area. At any rate, there's year-to-date values in certain areas, and those year-to-date really are not year-to-date. They are ever since the last time there was a closing of that module. So what basically that means is there's no date parameters that control what year-to-date means in those windows. If it says year-to-date, it doesn't really mean year-to-date. It really means the amount of transactions since the last time you closed. And that can be tricky. What that means is for it to have real value, that close has to happen consistently and without overlap. And as we all know, in the first 2 weeks of January, we're going to have both December transactions as well as January transactions. So it's really hard. And for that reason, a lot of folks don't find value in closing the sales and the purchasing module. I sort of am one of those folks. But I do want to show the process if you use it. There are some downsides to this, and I'll show you that as well. They're really just reporting downsides, and I also have some fixes for that. So you really want to keep that in mind when you're running your sales module. I've had some folks go to close their sales or their payables module, and the last time it was closed was 5 years ago. And that's because there really is no restriction around it. There's a misconception about 1099s, which we'll talk about in a minute. So that's my little soapbox theory on sales and payables. But It does do all of the updates for those year-to-date values. So if you find those year-to-date values valuable, then you certainly want to do this. I prefer to use date restrictions from this date to this date. That dictates my year-to-date or my date range rather than just since last close. You want to make sure if you do run this that you have all your transactions posted and that you complete your normal process for month end. Pre and post backups just like normal, just like the other areas, and be sure that you have your sales module closed and your fiscal year set up and your new periods open or at least created. It's a pretty simple process. I'm going to show you that in a minute, but in kind of a little sidebar to payables and sales, in a very similar fashion, you can close your tax year. And there is a routine for that. The routine is administration routines, company, and tax year and close. And this basically does the same thing I just discussed. It takes everything that is considered current or since the last close and moves it to history and updates the year-to-date and life-to-date values. So that is an optional closing you can run. Not very many people do it. This definitely should only be done after you close your sales and payables module, and because you would want to do them in sync, in harmony, you'd want to close payables whatever day you determine and close sales whatever day and do the taxes as well. What happens though is that historic data gets deleted. The tax year information from the prior year gets deleted. It does update that life-to-date value so that you know what it was last year, but the details get deleted. And here's our quick closing steps for closing the sales module. You can close your sales module on a calendar basis or a fiscal basis or both. So if your fiscal does not align with the calendar year, you can have two separate closings for those year-to-date values. So let me just show you how this works. In sales, routines, and then year-end. Now here is real simple. I want to close either both of my calendars or one or the other. And do I want to see a report? It's going to show me my last closing. I'm just going to process this and get a report. Now this report's going to show me my closing values for everyone. Mine are all going to be 0 because the year to date here, because I just closed it as a test to make sure I didn't have any trouble. So you may want to save that off as a text file. And then this is for sales folks. It does update the sales individual records, salesperson records in the system, as well as territories. And that was the territory report. Very good. That's sales. Kind of the same exact thing with payables, except I'm not going to go into the details of what year-to-date is again. Same concept. It's up to you. It's optional. What folks tend to get into here is, well, maybe I have to do it, or I do have to do it because of my 1099 process. And that's not true. Your 1099 process can run independent of year-end, and you don't even need to have a formal closing of payables module in order for your 1099s to run just fine. So again, the same challenge for payables. What's going to happen is anything new that gets entered is going to be considered for the new year. So even if I close it today, but tomorrow I get an invoice that was for last year, that invoice, no matter how hard I try, it's going to be counted in the new year. There is no date parameters. Okay. Again, the step-by-step list here. If much like payroll in a sense, and I don't want to oversay it, but I also don't want to undersay, because a lot of folks just kind of let this slip through the cracks. That year-end update I talked about for payroll, it does often include things like 1099 tax changes, luxury tax or luxury depreciation, so things for fixed assets, things for 1099s. So it probably is a good idea for everyone to apply the year-end update. I'm not saying you have to run out and do that this year if you're not a payroll person, but it probably should be on your radar to do every year, just so you capture all that latest and greatest. It's an upgrade, it's an update, not an upgrade, so it's a lot lighter and it doesn't have all of the pains with ISVs, etc. But in the years past, there certainly have been 1099 changes. So that's why I have that double asterisk there with the year-end software update. A little side note as well in the payables module, if you use encumbrance management and you want to carry forward the balance availability into the new year, there is a routine to do that. So if you do have a balance forward availability for your encumbrance, that's purchases, routines, year-end encumbrance transfer, and it moves the amount available from the current year to the new year. So let's talk a little bit about processing 1099s. I know you weren't going to let me get away without talking about that. So I just got done saying that closing the purchasing module isn't all that important. It doesn't affect your 1099s. And so let me elaborate just a bit. So what I see folks do is they'll come into their SMARTLIST and this purchasing out of the box SMARTLIST, and then vendors, and then there's a 1099 vendors out of the box. And you can add columns to this. So if I go into add, one of the first things I see is 1099 amount year to date. And if I add that, one might think that I'm close to knowing what my 1099 values are for the current year. When the reality is, if I was explaining this well enough, what this really is the amount of information in this bucket, the amount of dollars in this bucket since the last time we closed the payables module. Well, that's not what 1099s are about. 1099s are about what got paid in that calendar year. So if I wait to close my payables module until the 10th of January, anything I paid in the new year is going to be included in the previous year, therefore making this amount incorrect, completely incorrect. So keep that in mind. Never fear though. We've got, so my point here is be wary of those SMARTLISTs for the year-to-date values, because they're just not going to be accurate. I find it nearly impossible to imagine a scenario where that could be accurate, because we never get all of our December invoices in the system in time. One other thing, 1099s, there's no electronic submission support for GP, so if you need that, contact Aaron or Chelsea and they'll be sure to help you. So when I mentioned about the be wary of SMARTLIST, there is an excellent SQL view that fellow MVP Mohammed has on his site that I just leverage, and I love using it because it literally is the accurate SMARTLIST that you need to use. It looks at the table in the system and pulls that information in rather than the year to date, and it has date parameters in it. So if I come into my SMARTLIST, I have it in here, right here. So you notice here's my 1099 edit list that I created, and I've got calendar years in here. So I have like I said, demo environment, but if I had multiple years of transactions, I would see these and I would just use my search and sort it out. And over here, it's right here, the amount paid in 1099s, there's our amount. And it even has your vendor check name on here, which is the name that gets printed on the 1099, not the vendor name. So that'll be included as well. That's a pretty helpful SMARTLIST for you. Printing the 1099s, and when you go into the print 1099 window, so if I come into utilities, strike one, okay, there's my edit. Now let's see. There we go, print 1099 in my routine. If I come into the print 1099, I've got two print buttons here. One that I would recommend running first is the second one. This would be your edit list. So if I print this to the screen, it gives me a list. I only have one that's active for this year, but it only takes up 5 lines here rather than the actual 1099, which takes up the whole page. So if I can do, now I can do print forms after I've edited my 1099s, if I had any, and print these on the card stock that I need to print it on. Pretty simple process, and that's 1099s. So here's an update on, as I mentioned, on the complete closing process. All of those 4 through 7, those are optional and they relate to the 1099s. So keep that in mind. You can run your 1099s for the current calendar year anytime you want. So you don't have to run them January 1st. You don't have to run them January 31st. You run them when you're ready. when everything's taken care of. Theoretically, there won't be any additional transactions applied to your 1099 amount for the year 2017 after January 1st, 2018, assuming you use real dates for your check dates, because 1099s are by payment date, not invoice date. So pretty cool stuff. Don't get confused over what's needed for 1099. We'll move on to our second last one here, fixed assets. There is a formal process for closing the fixed asset ledgers, the fixed asset books. And when that happens, it creates a new year ID in the system. So if you use fixed assets, you definitely want to close this module. When should this be run? You definitely need to make sure all of your transactions are in it. Put a little note in here after purchase is closed formally. What I specifically mean there is, hey, do you have all of your invoices in the system, and have you identified what needs to become an asset? Make sure you've done all of your fixed asset transactions, depreciations, retirements, etc. I have a list here of some reports that you might find helpful. Depending on your version, I think back to 2013, you were not able to recreate the year-end reports. So that's why I have them on here, but you should be able to recreate most of them now. So pretty simple process for fixed assets closing. It's a routine as well. It's financial routines, fixed assets year-end. And you get a list of your available books. You select them one at a time or insert all and then close. And what is important here is that you make sure that you have all of your transactions posted. There's I can't say that enough, because it can be a headache if you don't. And so want to make sure also, now that most versions of GP have the ability to post into historical years, you can technically close fixed assets after you close your general ledger year. I'm not suggesting that's the best practice, but you technically could, because if you run your depreciation and you post your general ledger journal entry, if your previous year is already closed, if your financial module is already closed, it will take that journal entry and update your balance brought forward for the new year, assuming that nothing was on the P&L. If it was on the P&L, it would certainly update your retained earnings account. So technically can happen. Do have another SQL script here for historic depreciation SmartList. I encourage you to go ahead and use that. I really find this super valuable. Getting the data in Excel is so much easier from a SmartList. So I have that there for you as a little life hack. Closing fixed assets. Let's go ahead and do that. Financial routines, fixed assets, year end. And I have my list of books, and I'm just going to insert all and hit continue. And when I hit continue, I'm going to get a year-end close report, basically reminding me to, hey, make sure you've depreciated everything. And now in my fixed assets module, everything's going to have the new year as the current year. Alrighty. So let's go then into our last, but most important, is our financial module. So who should run this procedure? Well, certainly any business who's ready to mark their year as historic. And what historic does in GP, I'm sure you're all aware, but it takes that your P&L accounts and updates into your retained earnings and takes your balance sheet accounts and applies a balance brought forward so you get that life-to-date value in your balance sheets. Without that happening, running reports to Management Reporter or JET or any other financial reporting tool can be a little bit of a challenge, and you have to have a workaround. When should it be run? After all your other modules are closed. If you're going to close a module, then it should be closed before you run this financial closing. Absolutely same as before when all transactions have been posted. If you're an analytical accounting user, you want to make sure you go and validate your analytical accounting account setup to make sure, for example, if there are balance sheets, there's a balance brought forward entry created. And it happens automatically. There's no formal closing process for analytical accounting. It happens along with financial closing. So again, the retained earnings get updated, your balance sheet accounts get updated, the open years move to history, and AA accounts are updated as well. A simple cheat sheet here. You may want to print final trial balance reports, financial statements, things like that. Yeah, but you can always go back and run them later. That's sort of an old school tip there, but do your pre and post backups for sure. And let's go ahead and take a look at some of the information we've already talked about on analytical accounting. If you're an analytical accounting user, there's a nice knowledge base link there for you, so you can read up on what happens when you're closing analytical accounting. And also a couple life hacks here. If you use unit accounts and you don't want the balance brought forward, in older versions, GP treated unit accounts as balance sheets as a little script to run. In newer versions, the unit account window actually has an option. So if I come into cards, unit accounts, so if I use unit accounts, it'll give me an option to clear balance during year-end close. So checking this treats it like a P&L account. Even unchecked treats it like a balance sheet account. So you want to make sure that you audit those. And so speaking of auditing them, no, you don't have to wait till your audit's over. A lot of folks are leaving their year open because their audit's not over and they know they're going to have entries. Under Financial Setup General Ledger, there's an option to allow posting the history, and that certainly is all you need to no longer have to worry about leaving the year open. So you technically could go ahead and close it up, on your normal monthly routine closing day, your maybe 8th business day or whatever it is, and just when you have those audit entries, just post them and the system will take care of itself as long as you have this checked. So one more thing about auditing. So we mentioned that the retained earnings get updated and the balance sheet balances get brought forward into the new year. And that's not just because the system doesn't follow a numbering sequence, kind of like we do when we're creating accounts. What really controls what gets closed out to retained earnings is the setting on the account maintenance window called posting type. So no matter what my segment values are, here's my cash account, and it's a 1000 series, and I know that's an asset and a balance sheet account in my numbering sequence, but the system doesn't know that. And how the system knows that that's a balance sheet account is because I tell it right here. So I could set it here as a profit and loss statement. The only thing that's going to happen, and it's very important, but the only thing that happens is when I run my year-end close, this account will get closed out to my retained earnings. Well, we don't want that to happen, certainly not for this account. Now, the same is true on the other side of things. So if I go to a P&L account, here's a travel account, and it's flagged as a balance sheet, this account will not close to retained earnings, and it will carry its balance forward. And those are both wrong, right? So what we need to do is before we close our year, we audit those. We have to do a really good job of tracking that. And all I'm doing is going to my SMARTLIST for accounts. So here's my accounts. And what I need to do is I need to take a look at my numbering sequence and kind of compare it to the posting type. So my environment, everything below 4,000 is a balance sheet account, and everything over 4,000 above is a P&L. So all I did was I added the posting type, or excuse me, the account type to my SMARTLIST so that I can filter out posting accounts and unit accounts. And then what I did was I said in my search, real simple, if my main account segment is less than 4,000 and my posting type is equal to profit and loss. So anything under 4,000 in my numbering sequence should be what? It should be a balance sheet. So that's why I'm saying, tell me if it's under 4,000, but it's set as a P&L, because I know that's not right. And so that's what it's doing here. Remember that one that cash account that I changed? So it's quick and easily presenting that to me for me to just fix that. So I can save myself a lot of hassle by auditing my accounts before closing my year. So I'm just going to come in, fix it to the appropriate posting type, and then refresh my SMARTLIST, and now they're gone. So now if I look at my P&L edit, I've got quite a bit more on here. But look at what happened here. Several of these are unit accounts. So I can filter out unit accounts because I'm taking care of them separately. And I might have good reasons for some of these others higher in my numbering sequence to be balance sheet accounts, but if they're okay, they're okay. In this case, I'm going to let them go. Let's see, they'll be okay. But if I need to change them, I would just double click on them and change them. So once I'm done auditing my account setup, I'm ready to close my year. So everything's posted. I've done my work auditing my accounts. I've made sure my posting, the history is checked. And now I'm going to go into the financial routine for year-end closing. So let's go ahead and do that. Come in, routines, financial year-end closing. We have a couple options here. This is very important. If you're starting to fall asleep, please stay with me. This is important. These options here can be quite devastating if they're not set correctly, and you could have quite a hard time and may not even realize it right away until, it could be months before you realize that something has gone wrong. And there's options here. Remove unused segment numbers. So if you set up a main segment of 4576 and there's been no account that's set up with it, by checking this box, it will remove that segment number from your system. That's relatively harmless. You can always go back and create them. If it's unused, it's unused, right? But this maintain inactive accounts right here, this is really important. This option by default is not checked, maintain inactive accounts. So what happens is, if I have an account that I marked as inactive, and we're no longer using it and has a zero balance, if I don't check this box, if I do not check this box, it will remove that. Well, on a high level, you might think that's okay because it's a zero balance, but if you do a year-to-year reporting or anything like that where the account did have a balance, your reporting is not going to balance anymore. And that's really a big deal. And any budgets, any reporting you do for budgets is going to have trouble as well because those accounts won't be there. So you definitely want to check this maintain inactive accounts. So this is saying I'm going to keep my inactive accounts. And which ones do I want to keep? I can either keep the ones that have a budget amount or I can keep all my inactive accounts. So what you see on my screen there is an ideal scenario for what your settings would look like. Maintain inactive accounts and flag all inactive accounts. Now, there may be good reasons to remove inactive accounts. You can't undo it, so I would rather just recommend leaving them there. Better be safe than sorry. So another thing you're going to do is verify your retained earnings account, and then let the journal entry number just pick automatically from the system. No real reason to change that. Make the changes that we just talked about, and then close your year. Now, so right here, this year and this last closing box, I haven't closed one before, but you see my last year that's open is 2024. So 2024 is open in my system. What that means is I cannot close 2025. I must close 2024. So if you've got a few years open and you just heard me say you can close them, it's okay. You can post the historic. You're going to have to close them one at a time. So let's go ahead and verify my retained earnings. And depending on your version, you may have the ability to reverse historical year. It doesn't undo it per se, but it does undo it with a journal entry. It does make it an open year again, and it does create the reversing entry and gets things back in line so that you can use that year if you need to if it was closed in error. I'm going to close my year. It warns me that I may have batches out there, so we definitely would have done that work already. We would have gone out there and looked and make sure. And so then we'll get a year-end closing report, which is going to create our journal entry, clearing out our P&L. Right, so there's my journal entry. So now my year is closed. You see my last close date now is 12/31/2024, and the new year that I can close is 2025. I'm just going to stop right there, consider my work done. If I need to post an entry into 2024, I can because it's my last closed year. You can only do that entry into historic years for your last closed year. So in my environment, if I needed to post an entry into 2023, I would have to reverse 2024's closing in order to do that. And that is all there is to it for year-end closing. And I have a checklist here for all the things we just covered. And you may want to make sure you print a detailed trial balance report. And we have one more poll here. Chelsea, I'll let you take it over. And
thank you, Shawn. Yeah, and just really quickly before I launch this poll, I didn't mention in the beginning, but if you do have any questions, there's a question pane in the GoToWebinar screen, and we'll go ahead and answer those next. So if you have any questions and you want to get them in now, go ahead and do so. So as you can see, the last poll, we just wanted to find out which types of Interdyne Artist events do you find the most valuable? So, you know, we do a variety of webinars, usually about one a month that we host. We've been doing some in-person workshops. And then, of course, we have our annual user conference. So just a quick poll really quickly to see which one, you know, which types do you find the most valuable, help us plan for future events. So got about half people voted. So I'll give you guys just another couple of seconds to get that in. And all right, we're going to close it up here. All right, so looks like a lot of you guys like the webinars. We've got some good response on the in-person workshops and also some people that like the user conference. So good to see a mix, but we definitely will take into account, you know, the preference for the webinars and hopefully bring you some good ones next year in 2018 as well. So Shawn, I will.
So yeah. If we have it, that brings us to the end of our closing. Thank you all for participating in those polls and for joining us for this webinar. We sure do appreciate you being part of the artist family. Chelsea, are there any questions for me at this time?
Let's see. I do have a question for you. Does anyone have an IRS form 4562 that works with GP fixed assets for federal taxes? I'm not sure if that's a question you'll know, Shawn, but shoot it over to you just in case.
Well, no, I don't have a specific answer to that, but I guess anybody on the call, if you have an answer to that and you're willing to share that form, throw that into the chat box.
Go ahead and type it in the question.
Get that back.
Yep. So again, I'll just read that one more time in case anyone has the answer. Does anyone have an IRS form 4562 that works with GP fixed assets for federal taxes? So if you have an answer to that, go ahead and send it over to us. We'll get that answered for everyone. And then in the meantime, Shawn, this one's for you. How can I tell if the sales or purchasing module was closed last year?
How can you tell? One thing you can do is look at your year-to-date amounts. You know, pick a certain vendor or a certain customer, and look at your year-to-date amounts in the summary window, and see if they seem like it's, you know, several years worth or just 1 year worth. So if I look at my yearly summary here, this year-to-date column, I see I have nothing in there because we just closed it. But that's one way, and it would just be by estimation. I'm not familiar with a mechanism like a record that tracks the close, but that's how I would do it. I would look at it and say, you know what, Aaron Fitz, we did not do that much business with them this year. That must be a longer date range, if that makes sense. And you could change right here, just thinking through this out loud, this summary view, this is amount since last close. So you could switch it to calendar year and see that as well. So if they're different, then you know they weren't closed. They're not going to be exact unless it's zero, for reasons like I described earlier, because of that closing opportunity where invoices hang over into the next month. But using that drop down would be helpful as well.
Okay, well, that is all the questions that we have in there as of right now. Again, I think Shawn's got some contact information here. Oh, sorry, before that, again, just another reminder about our conference website again, and you'll get these slides with the recording as well. So you'll have this information. And then just to put up our contact information. If you have any questions, anything that you didn't get a chance to ask, anything that comes up later, I think we have one more question coming in. So we'll give it just one more second. But in the meantime, this is the contact information if you think of anything after the webinar. So Shawn, last question that I've got right now. So if I close the sales module on January 6th for December 31st, it will include those first days of January and the last close, correct?
That is correct. That is the pitfall of that close process. That is correct.
Great, thank you. Alrighty, again, thank you guys for joining us. We appreciate it. Hope you have a great afternoon and a wonderful holiday.
Yes. Thank you, everyone.